Have you ever had that feeling of seeing something so hot on your phone that you just had to swipe? You had to have the chance. The chance had an opportunity because what could happen is so powerful and so desirable. And the next morning, you roll over, you wake up, and you look down at your phone. You adjust your eyes and you blink multiple times, and then it hits you right here, right below your heart. It's like an empty feeling in the pit of your gut. You see the stock you swiped up on yesterday is down 10%. The money that was supposed to go to work for you just robbed you. Well, hey everyone, me Kevin here. If you're watching this video, there's a good chance that you know that feeling. You finally put your money to work for you, and rather than work for you, it robbed you. Well, yesterday I told you I was buying stocks, and I told you specifically which stock I was buying. And if you're watching this video, there's also a good chance that you know that I consistently say that my sell button is broken. Meet Kevin doesn't sell stocks. Well, today, I want to talk to you about why I just sold. And you want to take notes on this one. So go to your drawer, go under your desk or under your bed and get a notepad and take notes on this one. Because this, if you follow this advice, is very, 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 very likely to make you much more money investing. This is so huge that you don't want to write it down on something temporary like a whiteboard, which I'm going to hold up to mention today's sponsors, which are Webull. Deposit $100 and get 2 free stocks with the stock trading platform Webull. Get your life insurance in as little as 5 minutes, and of course, sign up for the programs in the links down below. Make sure to use the coupon code. There's a coupon code in the description. But anyway, yeah, and with Webull, you gotta deposit the $100 so you get the 2 free stocks. Okay, let's move on. So when the market is down, you feel pain. And obviously, sometimes that pain gets so large that you kind of want to sell low. And sometimes it makes you wish you had the life insurance and these sponsors with the 2 free stocks. But on the flip side, if you hold through it, you sometimes get this feeling that, okay, I suffered through the pain of the down, but it might go down again. This is the emotional roller coaster they always warn us about. It's very toxic. It's so toxic it can consume you. And it doesn't help that there are all these sayings that are like, oh, you should cut your losses. Oh, you should trim your winners. You should really rebalance your portfolio. You know what? It's okay to take gains and just play with the house's money. All this crap is designed to make you make a decision. But the most important decision you can ever make is to get in and then do nothing. Once you get in, you want to feel like you stepped into a pile of green goo like Jello and you can't move anymore, or it's really hard to move. So if I'm bagging on all these things, why did I just sell? Well, here's exactly what I did, and this is a huge lesson. So write this one down. I had about $100,000 invested in the Simon Property Group, a mall REIT. Yeah, I know, stinky, right? Malls, ew. And I had $100,000 invested in Delta Airlines. Ooh, airlines, ooh, also stinky. Yeah, I know, both downtrodden, okay? I got it. Both stinky during the Roni Rona. And here's the thing. These stocks, they didn't do so hot in March, April, and May. I bought these companies for an average of around $54 for Simon and about $22 for Delta. You know, a couple of weeks ago, these stocks, they hit even lower lows. And I realized something about these two companies. It's something that I'm gonna show you right here on this Google Trends thing as soon as it pops up. Take a look at what I realized about these companies, right here. These companies, an airline and a mall REIT, almost perfectly track each other. That's weird. During the Roni Rona, these stocks have almost perfectly tracked each other, and I was buying both of them. So when they were down, I was buying, I was adding to my positions. And so today these stocks are about $31 and $85, way higher, right? So like if I sold at the bottom, I was an idiot because I should have just held and they would have been way higher. And now that they're way higher, the normal feeling is to take gains, because if you take gains, well, that means you realized profits and you could tell all your friends that you realized profits. That way, when the cynic in the comments goes, well, you haven't really made any money until you sell. Well, I could show them I'll have sold and I'll have made a profit. Well, there's a problem with this, and the problem is called taxation. But that's not only what I'm gonna talk about. Hold on, hold your horses, keep this pencil sharp. When you sell at the top, or when you sell when stocks are profitable for you, you're gonna be paying probably 30 to 50% in taxes on these stocks, especially if you've only held them for under a year. Taxation is the worst thing you could expose yourself to. You're literally making money and then giving 30 to 50% away to the government. Like, that's a guaranteed loss. Now, yeah, you could do this in a Roth and prevent some taxes, but that's a very small amount of money that you can put into the Roth, and I know there are conversions and things like that. Really topic for a different video because we've got a big lesson here. The problem is, when you get into the habit of selling, you get into this mentality of always selling at highs, and then you're always paying taxes. And taxes is your worst nightmare. Well, remember last month I said I had $100,000 in Simon Property Group and $100,000 into Delta. And I bought them at pretty low lows, 52 and like 22, something like that. Well, they fell to substantially new lows. They fell to 19 and like 48. And so that's where I realized, wait a minute, they track similarly. They're at new lows. I'm gonna do something here. I sold every single share of Delta I had, which meant I realized about a $20,000 loss. And I say realized because it's like, I realized something, and people are gonna go, Kevin, you realized the loss. Wait for it, because the one who lasts best. I instantly took the money that I had left from Delta and put it into the Simon Property Group, which, remember, that Google thing I showed you, they're both on the same ride. So I sold Delta at the bottom, put it into the Simon Property Group, which kind of meant I just lateraled over onto, like, it's kind of like I'm on the same roller coaster ride, but I just jumped cars. Kind of like when you go to, like, Disneyland, and you jump on over to the other Lightning McQueen in the race. You're kind of on the same ride. You just went onto the different car, right? Well, wait a minute. When you sell, you also realize losses, which guess what's good about that? Remember the 30 to 50% thing I told you about in taxes? And check with your CPA. Everyone's tax situation is different. But by realizing about a $20,000 loss in Delta, that means I'm going to write that loss off, and now I'm going to save about $10,000 on my taxes because I moved money from Delta in the Simon Property Group. But wait a minute, they're on the same ride, which has proven true. The stock's almost doubled in value. So even though it looks like I sold some of my portfolio at the bottom, I lateraled it over. I took a tax benefit at the bottom. I harvested losses at the bottom, but I instantly reinvested the money the same day, and my wealth still went up the same way on the same ride. So I literally just maximized my wealth in the best way possible. I saved $10,000 in taxes, and now I ride the wealth gain of the stock going up in value, and I'm not paying taxes because I'm not selling. So I didn't miss out on the upswing because I lateraled over onto something that was on a similar ride. You can't like sell Delta and rebuy Delta because that washes out, right? You have to buy something else that's similar. And I did that, saved taxes, and I still got the same gains. And so rather than selling high to take a profit and realize gains, I'd rather borrow against my stocks. And I don't recommend you borrow, but I'm just saying, I'd rather borrow against my stocks than guarantee a 30 to 50% loss by selling and sharing it with the government. Yeah, you could reduce some of these by having long-term capital gains, and maybe you're between 20 to 30% then. But in a state like California, I get screwed selling. And in most parts of the country, even if you're in a no income tax state, you still get screwed selling because you're still giving 20-something% to Uncle Sam. And look, the only reason these sayings come up, like trim your winners and all this kind of stuff, the only reason that stuff happens is because hedge funds tell you to do it so that when you invest in the hedge funds, they can send you a statement at the end of the year and go, look how much money you made, aka look how much money you have to pay in taxes. They're not in the business of saving you taxes, they're in the business of making you feel like you made money. But guess what I did? Instead, in my private live streams, I posted a video the day I made this transaction, and I called it the Stock Market Mayhem. If you join the programs, it's still there. You could literally watch me do it. Watch me make this trade. Anyway, if I have not convinced you yet to consider looking at the programs in the link below, because you might have that thought, well, I'm just gonna find everything you said on Google. No. Let me tell you, you're not gonna find it all on Google because A, you're not gonna find the way I explain things on Google, and B, the stuff I tell you is not even stuff you would think about even searching for. So consider that the programs down below. Nobody has joined and said, I feel like I got ripped off. Nobody. nobody. Like, everybody has learned something substantially. Anyway, later today, I'll be posting some more lectures on pump and dumps and things like that in the money course where I talk about stocks and I teach you how to value stocks. A lot of new lectures coming in that program. But folks, keep in mind, what's the most important thing that you can do right now? If your wealth is below $5 million, buy real estate. The stock market is fun, it's great, but if your wealth is below even $500,000, ask yourself, what can you do to build money, build a down payment, and get into real estate? I'm in escrow on a $760,000 deal right now. And folks, buy and then wait. Don't get convinced to, in my opinion, sell and pay taxes. If prices fall, just buy more. Because guess what I did with Dave & Buster's this morning? Dave & Buster's is down, so I bought more. Thanks so much for watching. Make sure to get your life insurance, get your 2 free stocks with Webull. Check out the programs in the link down below. And, well, there you have it. Thanks so much, folks. We'll see you next time.